Okay, so this video is for people that trade smart money concept or price action or ICT or any of those things where you have specific names for change of characters, break of structures, whatever, fractal, da-da-da-da. I want to show you how your chart looks and the thing that you're probably missing, which is super basic. So I figured I'd share it in this. All right, let's jump right into trading views. So you're probably using a bunch of specialized, specific SMC ICT indicators that show you areas of supply and demand, where the order blocks are, so on and so forth. You're learning to identify breaks of structure, internal breaks of structure, change of characters, but you might not be able to do it on your own, so you have indicators showing you how to do that. Because those indicators only show you areas of supply and demand on current price, you're also probably marking up areas on your chart with these boxes, finding areas of flip zones, liquidity grabs, seeing where price broke a previous high, grabbed a little liquidity, and then cascaded down, continual breaks of structures, internal changes of character, higher time frame changes of character showing an uptrend. You're doing all of this and it seems to maybe be confusing you a little bit. So that's what I'm here for. I want you to simplify it. I want you to go back to the basics and look at price action and look at the fact that if it's an uptrend, trade up. If it's a downtrend, make short positions, or if it's consolidating, understand that it's consolidating. So you can clearly see price going down here. Back to the basics, drawing a simple trend line. You can see that price broke out of that trend right here, grabbed a little liquidity and kept going down. Price broke through the trend line, failed to reject off of it, and continued trading below that previous trend line. Then looking at the new uptrend right here, we can see that it was broken. It made a new uptrend, but if we look at this as a parallel channel, we can see that it maintained above this uptrend, broke through that, maintain an uptrend, but in the lower parallel channel. Putting that in confluence with your areas of supply and demand, you got money in the bank, my friend. So when price breaks a downtrend into an uptrend and starts making new higher highs and higher lows, you know it's a new uptrend. Versus if it fails to make new lower lows and lower highs after an uptrend, what do we get, people? Consolidation. For a consolidation, all you need is literally a failure to make a higher high in an uptrend. Failure to make a lower low in a downtrend. So this is our high point right here. This is our low point right there. That's where you had the failure to make a higher high. We made a higher high right here, failed to make a higher high. My instant gut reaction every time it fails to make a higher high is it's going to consolidate, and that should be yours as well. So my GAN box might be a little bit different than yours. Here are my settings. I literally just have the top, the bottom, and the 50% line, and I have it all white. That way you can see when you have hard rejections off the 50% level, you know that it's most likely going to break down to the downside, or if a rejection going up from the 50 level, most likely going to the upside. We broke through the bottom of this consolidation, and now, my friends, it's very simple. We are in a downtrend. So because you trade price action, smart money concepts, whatever, you are looking at areas of interest to get in on your trade, but you are biased to the downside. So areas of interest are like right here and right here, because these are areas of supply and demand or order blocks or support and resistance, whatever you want to call them. Literally, they're all the same. So if price does something like this and rejects down, you should be entering your trade, targeting easy money right here at the previous low and looking left for deeper price targets like here and then here, maintaining the downtrend. But if price hits this or this and breaks through this trend line and then starts going up above all of these areas of supply and demand and support and resistance, you are now in an uptrend. Price does one of three things, people. Price either goes up, price either goes down, or up or down, or up or down, or consolidates some more, or goes down, or up, or consolidates, or goes down. This also works on higher time frames. Price goes up, breaks an uptrend, price goes down, breaks a downtrend, price goes up. So if you're smart, you'll do multi-time frame analysis. And if you are in a short position, know that overall on the daily, we are still in an uptrend. Back to basics, people. Use trend lines. Price is one of three things: uptrend, downtrend, consolidation. Stop getting overly confused about all of these areas of supply and demand and order blocks. Look at which way price is going on every time frame. Magic.